What's up guys, it's Zeb. Okay, so this week was just crazy. First I learned that about 50% the American workforce has already quietly retired. Which means you've mentally checked out of your work and now you are alone.
At least I learned to do it. That's what the credit card interest rate is now.
At a 26-year high and expected to go higher. I learned that the stock of Russia. The market crashed this week and I learned that is considered from September 1928. Worst month for stocks, the market gained only 44.7%. There is time and the stock market expect to go down to at least October, and I learned that inflation is so high that if CPI is the consumer price index, something that measures inflation,
CPI 0 for the rest of the year, the number will still be more than 5%.
Now I also learned that I was right about my prediction for my last video, that the central bank will fight against all this inflation. This is called the federal funds rate, 0.75, which remember is the interest rate. Banks to borrow money from each other. Second, and then I learned this real. The estate is in a lot of trouble with this year because Jerome Powell just said, quote, to hope for the best but prepare for the worst, and it's never good.
Sign it when you hear it from someone. Never give you bad news and then I do.
Learn from companies like Meta and Google. Dozens and dozens have joined. Companies that started this year, leaving people. But the craziest thing
I learned this week that there is a twist. Basically everything is on fire. Everything will be fine. Let me go break everything and go point by point. Point out and explain exactly what happened in this crazy week. Let's get right. Hi, my name is Andre Dick Hope in it. You are doing well. Come for finance.
And stay for the crazy week because quitting silence has now become news. The story is now to leave silent while you mentally checked out of your work.
And Gallup defines him as someone no longer actively engaged in their work.
And someone who just does what they are. According to Gallup, it needs to be done now. Data engagement levels went down from 36% to 32%. 2020 to 2022, and this is the first time we've seen a drop in engagement since then. Year 2008 and above, segregation actually increased by 18
in 2019 to 2022, and shows the data that most people remain silent.
Dropouts are people aged 35 and under. Millennials have left the building now.
Have to say I really relate to silence. Leaving Sahir is my confession. I am silent. I quit my last job a year ago. Actually left, and though I still did all my work and I was really good. By distancing yourself mentally and emotionally. It was really healthy away from my work. Because it allowed me to focus on that
thought was more valuable to me. At that time, if anything, leave it quietly.
Less is said about people's work ethic. More about the hustle and bustle of work culture.
Work where most are expected. Consistently stay up late on weekends. Keep their phone on them and always compete to increase this calm release. Now connected for some reason. At least doing it, but if you think it's about doing what you're doing, literally paying to do is fine. I should be. My wages are allowed to follow now, believe it or not.
There is no data to back it up. According to a publication by Leaving the Harvard Business Review silent, having a bad boss has a lot to do with it.
By having bad employees, and that is because they saw more than 13,000
employees, more than 2,800 managers, and they found that with managers,
most positive employees had the highest amount in reviews, who were willing to go the extra mile, and they found that with managers,
had the highest amount of negative reviews, the least number of employees who were willing to stay late and go the extra mile. And it makes perfect sense. Because when you have good influence, leadership, you are naturally motivated and want to follow in their footsteps. And when you have bad and ineffective leadership that keeps opportunity through the door
for yourself, you will not want more. It makes me feel good, and that's it. The start of the week, though it goes now. This week I learned too. The most important thing is first how gone by the very high interest rate, and
the second is where interest rates are finally going, and it's away.
More important because that's what it is. First affects the stock market.
Did the federal funds rate rise to 0.75, which means current now?
The federal funds rate is 3.25 or 325 basis points if you are an economics major. Now everyone was predicting but the reason went to the stock market.
The bottom is due to something called terminal interest rate, which is a fancy economic word when the Fed closes rate hike, because earlier this week, the CME Feed Watch tool is the only tool that predicts where interest rates are
going to know that the device was expected the Fed to stop raising rates when they reached 4.5. Remember, we are at 3.25, but it seems that the market was originally
wrong because prices are going to be too high. High and low we now know.
It's because of something called SAP, Summary of Economic Estimates. This is sometimes called a dot plot. Now the dot plot is really confusing.
Charts that look like this and look like this. Complicated, but it actually is. It's easy to read once you understand it now. 19 of them are blue dots. Any year and every single one in blue represents a member of dots. Member of Illuminati, aka FOMC, and the dot placement represents them. An economic estimate that is just one boogie word for their best guess.
Don't know for sure what's going to happen. It's just their best guess where
they think the interest rate will have to inflation in a given year is to be met.
It is equivalent to know the correct one is the interest rate. Percent now reason stock this week the market was bearish due to this column in the year 2023 because it was assessed out of 19 members who voted. Rates should be 4.9% and it confused the market because
the market was all expected to be here. Instead in the 4.5 range, and that's it. That is, about 1/3 of the voting members think that the interest rate is to be more than their original thought, and since it happened,
the stock market now goes down the dot plot. It also shows that we will probably see
this year there was another 1.25% increase, which would put us at exactly 4.5%,
and then of course we have this. The man is that person all the way down here. As I bet the rates will be at 3.9, and see, they may be right, but it makes sense.
The economy will have to slow down and the Fed will either have to stop
raise rates or start changing course, and it could be, but for the odds
it is too small because inflation is still technically out
control, but because of all these rates hiking is a lot of fun starting to happen, and one of them things are credit card interest rates. Now here's an interesting fact about credit cards. The balance increased by $46 billion. Only the last 3 months. That means credit cards and revolving credit are now available. Now I have learned to never carry a balance and always pay. My credit card is completely closed, but according to it, for the bank's average APR annual rate, the percentage rate has now reached 18.1. The percentage is the highest level since then, January 1996, but since the Fed fund rates are expected to be very high, so will credit card interest rates.
He is expected to reach 19 easily, which will take us to the highest level
since July 1991. So that means we is going to start to look a lot. A crime is called, and it is a credit card account held on at least a month. If you are someone who uses credit card, please make sure
do's and don'ts of paying everything in full be a part of this statistic, or else you're going to make Dave Ramsey very angry. You don't want to see him when he is. Anger now went to mortgage last week as well, to a 14-year high of 6.254.
30-year mortgage, and that means your own pal is warning people. There is inflation due to self-sheltering. Going to be high for a really long time. Time in crypto and Bitcoin are falling really hard, in part because the house just told everyone they were about it, but to start managing stablecoins.
Also because Bitcoin is extreme unstable, is considered dangerous, and no one wants to invest money in anything. This is a threat when the economy is also looked at
very dangerous, and because we are starting, the worst part is probably slowing down. Still ahead is Meta, Google, and other tech companies have already started layoffs, and they're not the only ones. Gap, Nordstrom is also Goldman Sachs and other terminations, and pursuant to a business survey from PwC, 44 polling companies said they were pulling back job offers. 46 said they were
reducing or waiving sign-on bonuses. Half of the polling companies said they would intend to reduce their head count, and 52% said they are starting jobs. Frozen hope companies are going choose to give people more freedom and
start paying people better so that they don't leave silent. But if you've made it, let me share with you so far in the video. What am I doing to prepare for what to do? Here's how I think about it. Investors really like fixed income assets and portfolios, and one of them, the best examples of this, are dividends. For example, my portfolio likes stocks, which I have since 2014, that pays me. This is regardless of monthly income. A thing is valuable whether it is more or less.
Reducing my monthly income is not really change, it stays the same for most
part, and it is extremely powerful, because when below or
the sideways market is not you on paper doing anything really does sometimes
more capable, sometimes costs less if you have 10 plus years of this type. On paper the market is as you have done it. 10 years wasted but with profit.
Portfolio, because you are realizing a profit, and even though you are paying taxes that reduce your returns if you are able to reinvest this profit.
Portfolio is actually you increase your number of shares at a time. When someone is doing nothing and he is, why this strategy and this stock generally perform well in an economy or a market that is moving or going sideways. Now below, if I had this portfolio in me, I will not have to make any payments for the Roth IRA. No tax at all on my dividend income, but I hadn't started so early, so most of my stocks are out of my Roth IRA, but this is why I am one of those strategists. Consider being a mega-backed or startup Roth IRA and supercharging with it dividend stocks, but it's all 1-2 strategies for higher income. But if you low income is also good. Knows qualified dividend income 100 tax-free till 41,675.
Up to $350 or $83 if you're filing now your remaining profits together.
The income will actually be taxed at a higher rate. The lower rate is known as capital rate of return instead of your personal income rate, and it is very good that compared to growth stocks exist on paper, and they go up and they go down, but they don't really anything unless you're going to sell it can be a really long time, and it is also why some of the old investors really love investing in bonds. Especially in the I bonds that are right now are paying 9.62%, which is insane, and this it will last till the 1st of November and beyond. This point they can adjust approximately 6%, but also treasury bonds, which are bonds issued by the government, paying anywhere between now 3 to 4%. Maybe you now said Andre is 3 to 4%. Not even anywhere close enough to match inflation, and it is true, but in one better than a market going down. Make 3 to 4% versus losing 20% in the SP 500 over 60. I am no longer investing in Bitcoin, saying that you should suddenly start buying bonds or chasing dividends stock. If anything, a paradoxical be said, and doing the opposite of everyone else. Tech is undervalued, for example, now, and it is historically one a very rare occasion, because usually tech is all the hype and all the rage, and it usually has a higher value, so there really is no one strategy that is going to fit. Each depends on how much is needed. You have time for risk tolerance and what are your goals, and that is something I wish I had known when I was small, because it would have saved me so much time and so much money trying to figure out what's best investment is, because I don't think so. In the meantime, there is such a thing. I am still reinvesting all my profits. I'm still buying SP 500 on earnings every single day, and if there is an opportunity, the average dollar cost of a Bitcoin low cost, or if ever real estate, well, I'll buy some of that. But meanwhile I'm making waffles, and by that I mean just being conservative. And as always, I would love to cut costs. It is wonderful to know your thoughts. Break the like button for the rest of your day. Subscribe.